Apple. This is the other big reason, the multi-trillion-dollar reason that the market can't get out of its own way today, Pete, because when you have Apple falling as it has today, you're not going to see the market rallying. I mean, Apple's down 4.25%. It's trading at the low of the day, about 124.50, right around there. And boy, opened 130.25 and then just zoom to the downside, basically allegedly offering or telling their suppliers, we don't need as much supply as we thought.
Yeah, those lines are never good, John, because that says a lot about what they perceive to be the demand. And they're talking about to the suppliers. They go, hey, look, we need a lot less. That's terrible. That is not what you want to hear. And that's not normally something you'd hear from Apple, but it is. And I would say this, I don't know if we've got the chart, Jared, or not, but if we do, our own Brian McCormick sent this to me earlier today. And John, what this chart is saying is, wow, this is a red alert. It has dropped down lower, down lower, down lower, and it's at these levels where he's concerned it could break even further from here. That it's got to find some legs at some point in time. This was a $2 trillion company plus, and now 25 months later, we are on the lows of the last, call it 25 months. This is a stock that's under some huge pressure. We love Apple. We understand the products. Everybody does. But if demand is that slow, John, that's going to be a problem, and that's going to affect the earnings.
Yep. Stock was 184.94 on the highs, and now it's 124. So that's obviously $60, Pete, out of that company. So no surprise that it goes from 3 trillion back down to 2 trillion. And today it broke through 2 trillion to 1.98 right now, trillion dollars.